This is MyStockScanner Live. Before you head into the weekend, let's break down the week's big moves and see what stocks past the 3-point playbook. And talking about the 3-point playbook, it's up. The portfolio for that is up by more than 32%. We will open that portfolio in our show on Monday, but we'll take a little peek already today and see what movements we have done at the end of this week. As always, the guys with the answers are Liam Flavel and Hans-Henrik Nielsen. Good to see you guys. How's the mood?
You too.
Mood's good. Mood's good.
Mood's good. Mood's good. Okay. Yeah. I see I'm the only one that's dressed up for the markets today in red. Because that's what the markets look like today. And my name is Jesper Behrens. I'm the man with a question. These could be your questions if you send us some at FOMO@MyStockScanner.com. And Hans-Henrik and Liam, of course, will be answering your questions if you have them. And we will crunch a lot of numbers. 2 numbers that you won't have to crunch, but I'll tell you the value of them at the end of our show. It's 8.28% and 0.85%. I'll help you guys out who's watching right now and tell you it's about ownership. But I'll tell you who owns those percentage of their companies at the end of the show. That today is about Bavarian, Nordea. We are going to talk U.S. regional banks, the trade war rage on, Taiwan Semiconductor, and Netflix and Amazon are going head-to-head in our Friday face-off. But let's dig into it and let's do a dive. And it is a dive. When I look up at my screen right now and look at the Danish market, Novo Nordisk down by 6.3%. All due to, should we say, a comment from Trump, or is that too much?
No, that's definitely not too much. That is, he just mentioned Novo by name and their weight loss products and said they would have to come down. I think he mentioned something going down from $1,000 a month to $150, something like that. And since it's one of their cash cows, that of course made the market a bit nervous.
Yeah. And so I think you have to check your mic and see if there's a setting that you haven't done. Some of our viewers are commenting that the sound is not too good. And we could, of course, just say that's the way you talk, but it isn't. Liam, the thing that Trump did here is probably not because he's going shopping in the Novo Nordisk stock himself, but it's a smart way to get the price down in a hurry.
If you want the price down in a hurry, then yes. I wouldn't comment on the shorting side of things too much, but it's an interesting one simply because $1,000 a month is a huge amount of money compared to what we pay over in Europe for these products. And I think over in the UK, Eli Lilly put their prices up recently, so you can get a month's jab for $200, $250 or pounds sterling, so about $300, $350. So they are significantly paying more over in the US. So he might have a point.
But if we look at Novo Nordisk, the stock itself, if we bring it up if you can, in the 3-point playbook, the reason why I'm going to ask is there's always the question about buying on a dip. Is this a dip worth buying? Because I saw, was it Svenska Handelsbank out and opting their sort of price target for Novo Nordisk.
Okay, Liam, you had it on there.
All right. That's yeah, go for it.
Okay, let's just see.
Okay, I'm still loading.
There we go. Here we have it.
Okay,
yeah,
cool.
There we are. A bit slow. Go on then, Hans.
Oh, no, it was just, it's actually a quality stock. We have had it for a very short while in our portfolio because it's good quality. And looking at the valuation, Liam, if you can, or is it me that has the...
I think it's Liam who has control.
Yeah, you have the screen, Liam. Yeah. It's actually, at least theoretically, well priced. However, we bought it a few weeks back. It started dropping and we sold it off because it went through our stop loss. So that is how we trade it. There's no doubt I have been looking for an entry into Novo Nordisk, and I took it when the opportunity arose a couple of weeks ago. However, right now, I would be a bit worried buying it again, but that is because if you add that volatility in with Trump coming in and just shaking everything up, we do like to buy predictable stocks, and with something like this happens, the predictability gets a lot worse.
And one thing is, of course, that we can look at Novo today. One of the questions that we had from one of our members at our email address, FOMO@MyStockScanner.com, is in regarding to Bavarian Nordic. I need a quick comment from you guys, because we talked about it, that there was going to be a vote as to whether to accept the offer at 233. In the meantime, that was put down heavily, sort of turned down by 75% or something like that. And now they upped the price to 250. We have a member asking, is that price high enough?
No, it's not. I am 95% certain that will be voted down again. I think the investors they are smelling blood here. I do agree with them, even though I'm not an expert of Bavarian. I do agree with them that offer, the initial offer, was just an insult, to be blunt. 250 is not much better, and they can now see that they are getting some traction, some momentum. So I think they will have to up the price quite a lot.
And we shall see if it comes, or else if they withdraw that offer, then we have an open door, and behind that open door there might be a fall off. We don't know. We'll have to see. We'll definitely keep you guys.
Yeah, it depends. If people think that they have actually proven that the stock is worth a lot more, then it might actually not be that bad.
We're going to
use the value chart to work it out.
Yeah, it is hard. It is hard to put in the value chart. I have tried.
Yeah, but we're going to talk U.S. regional banks in a minute. But before we do that, we want to bring up a local bank in the setting of Scandinavia. Nordea came out with a strong third quarter for their 2025 performance. You guys have, of course, taken a look at it in our 3-point playbook. And what's the result, guys? Is it a buy? Is it a sell? Where are we at?
Yeah, if I just share my screen here. Here we go. Oh, sorry. Oh, I'm moving us around a bit.
Yeah,
sorry
that's
about
okay.
that. Nordea, it's when we're just looking at the playbook here, it can seem a bit bad as a quality stock. But that is because the banks are that they're showing off a bit weird often in these. Just looking at the overall the Nordea their earnings, they came out really good. That was they have growth on all the right places, on the mortgage lending, on the retail. They are still doing well on the credit spread, meaning the difference between what they can borrow money at and what they are loaning it out to the customers at. So that was actually a really solid product they came out with.
But is it a situation where you guys, according to the 3-point playbook and the rules on that you would look to get into it?
Well, right now we have a data error here, so that is a bit hard to just show. We have said for a while that the banks are a place to be. We were out already in autumn last year saying that with the current interest rate environment, that would be a very good place to be, especially in the larger banks. We were out talking Nordea, Danske Bank, and so on, and they have had a party ever since, actually. Is it the right place to go in now? Well, the interest rates will probably drop lower, and that could hit the banks a bit. Also, if we're going into a bit of a recessionary economy in the world, that could hit the banks as well. But there's no really dark clouds on the horizon right now, so...
Nordea is dropping a little bit in the Danish market today, 2.25%. And again, compared to, if we go regional banks in the US, let's just say that's next to nothing. We had a huge drop in 2 American banks yesterday, Zion and Western Alliance. Liam, hans-henrik, make sense of that. What happened?
Well, first of all, regional banks are large banks. They sound small, but they are actually up towards $100 billion in assets. So they are big. You can see here, Science Bancorp here. The overall thing is, if we look at the ETF for regional banks here, it took a dive yesterday. If we look back at March 23 here, we saw something of the same. The thing is with the regional banks that there were a lot of legislation lifted from them back when Trump was president the first time. So they can lend out to a lot more people without all the credit checks. And right now they are, surprise, surprise, in the middle of a bit of a, I don't know if you could say scandal, but they have borrowed money or loaned money out to a lot of people that actually not had the collateral they said they had. Some of them are highly exposed to the car loan market in US, which is completely collapsing. It's in really, really big problems. So right now there is a problem with the regional banks. Also, that many of them, and I won't go too much into details, but they're in big trouble. We wrote about that already last year and again this spring, that they have a lot of bonds in their holdings. And since interest rates have gone up, bond prices have gone down, which means they are about $500 billion underwater on these bonds, meaning that if everyone wants to pull their money out of the banks, they don't have them. And that is why the banks right now, the regional banks, are taking a hit. I guess the larger banks could have one as well.
I think that also when you look at this, though, as well, JP Morgan had results this week, and Jamie Dimon, the CEO, was being quizzed on how he felt about it. And they were stellar results. He came back and said, I'm looking for cockroaches, which in his terms are their bank lending is absolutely fine, but they lend to these guys, these regional banks, and they don't know what's in their book. So he's starting to sniff that there might be an issue in their book with bad loans. Yeah, and we can just go back to 2008 to see what bad loans were really about.
And of course, you're talking about the subprime crisis back then when the housing market collapsed in the US. Are you guys starting to feel sort of a whiff of something?
We have been pessimist for a while now on the overall economy, but we have also said that as long as liquidity keeps pouring into the market, we are long stocks. So we are sitting a bit and saying this can only end really, really badly. But as long as the big guys are running into the market, we're just following along.
And if we're talking what the big guys are doing, some of them are embroiled in a trade war. It's going back and forth between China and the US. And China accuses the US of deliberately causing panic over rare earth because they're open to talks, they are saying. Is this the art of the deal the Chinese way?
Yeah, well, US and China is fighting to who should control the narrative right now. China have the control over the rare earth minerals. Trump is trying to find some sort of explanation to where it makes sense that he started the trade war with the ones sitting on the rare earth minerals. China made maybe some export bans the other day, and they got a bit of heat for that. So right now it's a bit back and forth in the media. I wouldn't put too much into that.
Some of those who use the rare earth, of course, the chip producing companies. And Liam, you are our techie on the show here in that sense that we have been talking about Taiwan Semiconductor. You did a big piece upon it that almost was the stock of the day because they came out with their numbers for the quarter here.
They did. Yeah, numbers were stellar.
Yeah.
Absolutely stellar. I wrote a long piece yesterday about it, and what I said in the piece was this is possibly the most important stock in the world right now, and no one really pays any too much attention to it. We all know about it. Effectively, somewhere between 30 and 60% of all microprocessing chips in cars, in your home, in your computer, in your phone are made by TSM. They're a fabricator of these things. They don't design them themselves. And because of that, they're the only game in town for people like NVIDIA, AMD, Broadcom, all the chip manufacturers that have been in the news recently. So that's why the results, you can see the yellow bars on the EPS on the playbook there, they're going up and up and up. And even though they've been doing that for 4 years, there's still gas in the tank for them. So
let me ask, Liam, because what surprises me is when you say that, and you say stellar result, and still they dropped 1.6% yesterday.
Yeah, what you get often with when results come out is you get investors who've got different time horizons, and they look at it and say, I've done my numbers. I've got the returns that I wanted for my risk profile and my what I've set out to do. Therefore, I'm going to look to put the money in somewhere else, or I'm going to wait for it to drop down again. You can see right now, Hans has just repositioned the value chart on TSM. They are expensive. They're at the top of that channel, and if you waited, then it could drop down and you could pick it up again. For us, we're in it. We're in the playbook. It's our largest position, largest winner, I think, so far since we sold the defence stocks. We're up 80% on it. It's still in the channel for us. It's still going strong. So we're holding until it drops out.
Okay, guys, I need you to put down your safety belt, make sure it's tight and stuff like that, because it's Friday, and that means that we have one of the reoccurring things in our show, and we're going to pit two stocks against one another. Let's have a look and see what the stocks are. Pitted Amazon against Netflix, and it's coincidence that one is a bear and one is a bull. It symbolizes something. I know that. It's not because we are saying one is a bull company and one is a bear company. Let's hear it. Those two stocks against one another, guys.
Yeah, I just did a piece on it. It's on our website right now, but let me just sum up quickly. When we're looking at the quality of them, they are both really, really good companies. You can see we have Amazon here. They had a couple of rough years back in around to the 2022, plus or minus there. Earnings per share is going up. It has fantastic quality. Revenue is going up. The thing called the PEG ratio, where we're looking at price earning compared to the growth rate, we like that to be below 2.5, and that is really good here. It's a solid company. They can pay their interests and so on. If we are comparing with Netflix here, quality even better, 100. Earnings per share going up, revenue going up, PEG ratio low. The free cash flow is good. Basically, we're looking at two quality stocks. So what I'm saying in my article is, if it were just from the quality, I wouldn't be able to decide. These are both really, really good companies. Then if we go down to the value graph here, we can see that the Amazon, I have adjusted so we kind of hit at least the latest tops and bottoms. It's a bit hard with Amazon because they have it's a bit like Novo. There is a pre-Vigovi and after Vigovi Novo pricing, and it's a bit like that with Amazon. Back here they were basically just an online store, and right now they are on the forefront of data centers and everything. But pricing of a PE between 29 and 42 is reasonable, and I actually don't think that's that expensive when you look at what they're actually doing in the entire AI race. And with that, they are somewhere between +2 and +51 in potential, just theoretically, just to see, are we having a reasonable risk setting here. On the Netflix part, we can see again, when we are trying to time these with tops and bottoms, we end with 36 to 57. That's actually a higher PE than Amazon, which is a bit, I wouldn't say worrying, but it's a bit strange. They are still somewhere between break even and 56, so they are a lot alike here. However, my conclusion today is that I don't have a complete conclusion because they're both very good. There's very good potential in them. If you think the AI wave, the AI race will keep going for a year or two, and we actually kind of think that, then you might want to position into Amazon because it's actually very fairly priced AI competitor. If you think that the AI wave is dropping off either completely or somewhat, and you think you want to move into some other stocks that are a bit more into retail consumers, then Netflix might be the place to be. It could easily be the affordable luxury that people want in the middle of a recession or a crash in the market or whatever. So it's a bit, what do you think about AI? And if you think it's going on, Amazon. If you think not, Netflix.
Liam, I'm going to ask, do you agree? Does Henrik have the marbles here, or did he lose them?
That's a completely different question, and we've only got about 5 minutes to discuss it. So I'm going to go with the first one. Yes, I think he's absolutely spot on there. And unfortunately, this is being recorded. Yeah, they're quality companies. We use Amazon. The data centers they're the largest cloud provider in the world. Yeah, they get tens of thousands of dollars off of us every year to run our data center, and we're just sort of very, very small. From a would we buy now point of view, we wouldn't buy either of them right now. They're not in the right channel. They're not. They don't look particularly appetizing. Netflix probably looks a little bit better. But we look at Amazon here. It could bounce off its 200-day average, but it could just as easily carry on down. We would wait to see for this to jump up from the 200-day, come up, test the 50-day, the green line there, and that's when we'd look to come in. So it's possibly, we could see a bounce right now. Netflix, again, like Amazon, has been trading sideways for 3 months now. That could just as easily start going up from their 50-day. The catalyst for this is probably going to be their earnings. If they come out with stellar earnings, then that could shoot up.
Next week, it's one of those companies, or two of those companies that are up for earnings next week, and we have a busy week. We're in the season right now. We have Coca-Cola, Philip Morris, GE Aerospace, Tesla, SAP, Amazon, as we mentioned, Unilever, and a lot of others. That's next week. But on Monday, when we return with the show at noon, we will be, of course, looking into our 3-point playbook portfolio. You just mentioned we don't have neither stock in there, not Netflix, not Amazon. But if we look at the numbers, let them speak for themselves. 32.26, I think the number is, that you guys are up with the portfolio. We had a couple of stocks that we let go yesterday. We're going to get into details on Monday, but what can we tell that we're going to look at on Monday?
Well, we have the one of the ones we sold out with a very decent profit was Uber, and that is let's just see if we can get it here. We made, I think it was something like 45% on it, something like that. And it had just been going sideways, and it started to drop. It has dropped down the 50-day moving average. And if people have watched our course, they know that when it does that, and there is quite a large percentage down to the 200 moving average, then we simply let it go. So here we had dropped down, trying to get up again, and then selling out, and that was an out.
And that's the rules that you guys follow. There's nothing, I'm going to say magic about it. It's just you stick to your strategy all the time, and that's why you're at 32.26% at the moment. More about the portfolio on Monday, but before we get that far, I know, Hans-Henrik, you are already starting to looking into your weekend wrap, and and you guys have on weekends, we basically turn Hans-Henrik loose, Liam, right? And he goes into long trades, but this one, you're going to look at the Fed balance sheet. Why are you looking into that for the weekend? And why is it interesting? Try to sell it here. I'll give you 30 seconds.
Yeah, right. I'm going completely nerd-a-mark on Fed balance sheet. Basically, Fed can control the liquidity in the world. And right now, they have been tightening up. They have been pulling liquidity out of the market, and now they are signaling that they're ready to push a lot of money back into the market. That will be good for our stocks. It will be bad for inflation. That will go up. So I'm gonna nerd a bit around in that this weekend.
I'll definitely look forward to it. It gives you a better understanding of the macroeconomics behind what will be the stock prices probably next week. See the show, see the weekend wrap from Hans-Henrik over the weekend. And I promised to tell you a little bit about ownership on those two numbers. 8.28%. That's Jeff Bezos' ownership of Amazon. That's how much he owns of the company. Red Hastings has 0.85 of Netflix. Those two were our face-off in stock of in our face-off today. I can tell you that Elon Musk has 24.7% of Tesla, but he's not even the biggest kahuna if you look around that, because Larry Ellison owns 41.29% of Oracle. Well, they are not having a bad weekend no matter what happens to the stock. That I can say. But remember, articles and in-depths are found on our platform. You can see them in our Facebook group. And remember, we also take your questions at FOMO@MyStockScanner.com. So we are almost at the end here. Remember, check out our platform. And you guys always welcome to ask questions, as mentioned already. It's MyStockScanner Live for this Friday. Invest smarter, sleep easy, and enjoy the weekend. I'll see you guys on Monday. Happy investing.